Welcome everybody to another week of volatility and of course another week of 2025, up, down and all around. Today we'll be talking about momentum, we'll be talking about volatility, and of course we'll be talking about how could we potentially get involved in a slightly safer way by potentially starting to stack evidence in our favor when it comes to these huge moves that we've been seeing. My name's Thomas Atkinson. As always, I'm joined by Tyrone Abella. Tyrone, what a week of volatility it's been, and really what a year it's been. We probably expect this to continue, don't we?
Yeah, look, we've seen some crazy stuff happening already. Welcome, everybody. Funny enough, it's a non-farm payroll week, so generally they're a bit quiet, but not so is the case this week. We've seen, up, down, and all around. But looking forward to jumping in and having a look at some stacking opportunities, which is, I think, more important than ever in volatile markets, Tom. Stacking evidence to give us some guidance when the markets are exceptionally volatile is probably even more important than calm and or markets that aren't behaving erratically. So, looking forward to getting into tonight.
Absolutely. As always, guys, if you have questions throughout, please feel free to ask them here. Also, post in the comments if you're watching it in replay. And remember to subscribe down below as well so you can catch these each and every week. We'll be continuing to do these each Wednesday at 8 p.m. I guess it would be DT at the moment, but that'll change to AEST. All right, thank you so much, guys. Let's get into it. Today, we're going to be talking about, as we said, volatility and momentum and trying to get involved potentially in these trades in a better way. Now, if you haven't been following the markets this week, you may not be aware of some of the big crashes that have occurred. Obviously, the biggest one probably in the crypto markets, with huge moves, especially in things like Ethereum and Solana and XRP, three of the major coins. Obviously, Bitcoin also moved, but nowhere near the percentages. And you can see here the actual wick. Let's just get an idea of the size here. This to the down low is actually 27% in one day. And that's a lot of any asset class, but particularly when you're looking at the second crypto. In terms of the way up, obviously, therefore, it's some significant percentages as well that could have been partially traded if you'd figured out the ways to do it. So what did we really kind of see here? Well, we had what we call a classic flash crash, and markets obviously dropped across pretty much any asset class except for maybe gold or even silver. They kind of held okay. And the US dollar obviously initially went up. But these are all because of course, the tariffs that we now know. Some are on, some are off. And this is the evolving thing of 2025. There's going to be a lot of news, but as we often say, it's patience, react, don't necessarily predict, build the evidence circle. So today we'll be talking about how do we do that? Well, let's firstly kind of load up some things that I did here on Ethereum as it was falling down. And we actually were looking at this live during one of our other recordings. And I said at the time there were a couple of key levels we were watching. So let's map those out first, because I think no matter what you're doing, even if you're a scalper or a day trader or you're someone that wants to invest or you want to position in or any of these things, you've got to go to the higher time frames and work out stuff first. So let's go really high time frame. We'll get rid of this red arrow and we'll basically just have a look at what we've seen recently. We've got highs, we've got clear resistance around this level up here, obviously the previous high, which we've already got mapped out here on the charts. And then we have previous demand, which is this structure over here. We know it's demand because markets went up, and we've seen that act as pretty decent support during 2024. And of course, it acted similarly this time around. So what we would do here, Ty, wouldn't we, is we'd mark out some of the key levels. And there are a couple of tools that we can use to mark out some of these key levels. One of those being the fixed range volume profile. We've covered it many times on the show here. And what you'll notice is that if we put it over this area down here, so this structural zone, we end up getting this area as the most traded zone. So it matters that possibly, we don't know this, 2610 could be a buy zone. It could be, doesn't mean it will be, does it, Ty? These are all about setting up areas to then see the reaction off, aren't they?
Absolutely. Yep.
Yeah.
That's what we're trying to get. We're trying to locate areas where we can actually have an interest. It's not an automatic buy. It's never nothing in the market is an automatic buy, Tom, is it? I think a lot of people think it is. Never.
That's right. So then the second one would be 2400. And if you were watching this live, what we might do is we might actually mark down the smaller timeframes here. So we'll get rid of the volume profile for a second. You can see it's quite even all the way down after that clear one level. Well, let's go to a 3-minute chart. Just actually have a look at what was the bedlam here. So you can get a bit of an idea of the reactions. So remember, before we had 2400 as being a possibility. Let's mark that 2610, and then we've got down here about 2200. And you can see I've written it retail steel because I think it's going to be. Now, the reason this is important is because did we see small reactions off that? Here? Yes, we did. We saw a small amount of buying. So probably correct that that was a decent zone. Did we see some at 2400? And we saw a little bit of buying at 2400. So yes, that was obviously decent analysis. Obviously, it didn't stack up. You haven't built the evidence in your favor. And then, of course, the low, which is the absolute low, was where we did see bouncing. Now, the importance of setting these up is we're looking for those reactions. And when we start to see big reactions like we did here, and potentially even like we did here, we can start to use certain indicators. And one of my favorite indicators to use in these types of wild markets is, you can guess it, probably the anchored VWAP. So why I like using anchored VWAPs is because we can pop them on the lows here for these particular periods. And what will happen is if a market is actually rallying up and it keeps finding strength, oftentimes it will come back to the anchored VWAP. And that first touch, which is over here, can be a decent buy or sell zone. And you'll notice here, and I'll show you this across a couple of pairs, Tyron and I will go through it tonight with you guys, that this can be a very nice area for a scalper or day trader to get involved in these rallies. And that then can mark out a very important point that you want to then focus on in the future as well. So let's see how that's played out and see whether it's come back down any other times to that level. And you'll notice here, we did get it coming back down on Tuesday, and again, a bounce off that area. So these particular extreme lows of high volatility events or extreme highs of high volatility events can act as very good areas, especially the first time and even the second time after it's made a series of higher highs and higher lows. And Ty, why would it be important that we actually see a series of higher highs and in this situation?
Well, this confirms that we've obviously changed from a downtrend to an uptrend. And I think that's, understanding price action, because when we've got a series of higher highs and higher lows, it's showing that the momentum has actually shifted. And the buyers have actually taken control. So sequences of lower highs or higher highs and higher lows, are giving price momentum, and price action is the biggest indicator or the most important indicator that you can follow. So we always are a very big believer in what we call also the lightning bolt. We don't use that term very often anymore, but we coined the phrase lightning bolt many years ago, didn't we, Tom? And it's effectively, and all that means is it looks like the shape of a lightning bolt when we see a series of higher highs and higher lows, and also lower highs and lower lows in the downtrend.
Mm-hmm. Yep, that's right. So it's important to look at that sequence, and the reason we want to look at the sequence is because it's, as Tyron says, confirming the trend, and that means that if we have made a higher high, then we come back and test an area that we know is an anchored VWAP off the extreme low in this case, then there's a good chance that there'll be a buyer there. Now, if it comes back down here right now, would that be as good, Ty, considering it hasn't made a higher high? Well, the answer is probably not, yeah.
That's right. Well, it's showing a sign of potential weakness now because it hasn't been able to go on and continue with that higher low sequence. So it's giving us the clues that we need. I think that's why it's important to understand how the higher high and higher lows actually indicate strength of momentum, but also just as importantly, when momentum could be starting to shift and actually weaken.
And you might think, well, okay, that's fine. You've cherry picked this one here on Ethereum, or you've cherry picked this on anything in particular. But let's have a look now at a couple of others. So let's have a look at Solana. And again, this will happen. Actually, let's skip Solana for a minute here and look at a euro. Okay, because obviously that's a currency, and a lot of you guys like trading currencies, indices, etc. We love all asset classes, and it's important that whatever system you do have, hopefully it works across multi-asset classes. That usually means it's market adaptive, and it's not specific to one thing. So usually that means it's probably a little bit more robust in terms of a system. So if we actually go and have a look at the euro, we've been talking about the euro potentially switching to the upside as the dollar finds weakness on the show over the recent weeks. And of course, we had this series of downward kind of lower highs, and we've got a breakout over here, Ty, didn't we? And it got past the 20 moving average. It rallied up, it came back down to around the 20. And full disclosure, while we were looking here, we were looking for, of course, buys if we'd broken those wicks up. So we wanted to take buys. Now, of course, the news of the weekend came out, and that caused a flash sell. Still didn't take the low over here. And what it did was it came back down to that trend line that we had drawn. You can see. So again, a key level plus the low. So that's a support level plus the trend line level. And you'll notice a lot of markets did this. Explore some things today. And then we started to see a rally off that point. So if we were already a little bit biased long due to price action, it's come off those key levels. Then maybe we could use a similar technique down on these lows. Let's go and have a look on a 5-minute chart and load up the anchored VWAP. So again, all we do is we basically grab the anchored VWAP from the tools here in TradingView, hopefully connected to pepperstone.com. And obviously you'll notice that we have a couple of higher highs and higher lows, and we make a higher high, higher low, and then we get a touch to that zone. Then we make a series of higher highs. So I'll just draw this for everybody here. Draw the arrows. So high, low, high, 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 low, high, 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 low, higher high, comes back to anchored VWAP, we're taking off the low. And this could also be another area of interest for us to potentially buy the market. And it doesn't mean, again, you have to instantly buy it or anything like that, the price, although they were obviously the lows. But what you could be then doing is implementing other reasons when you tie at these levels to then say, okay, well, these are likely good areas. Now, can I bring in my normal system? Maybe that's a 1-minute little change of trend or something else.
Absolutely. And once you've got those, and I think it's probably important to really highlight the fact that understanding the different time frames in these instances is vitally important, because you've got to go to the smaller time frames to try and get in if you're actually scalping. So, and I think the euro has given us a lot of good opportunities. We've talked about it for a little bit now, and even though it has filled the gap, by the way, it's already up and above that gap, and I think that's quite important. It's quite significant in terms of a momentum continuation, because prior to that flash crash, it was looking quite good and quite long, wasn't it, Tom? And I think we have done series on gaps and how they fill, but generally speaking, when a gap fills relatively quickly and continues on in the direction that the trend was initially going, quite often that trend is actually you can't forget about the fact that it fell, but you can discount it adds a lot of weight when it's actually filled the gap and continued on in that same direction, because sometimes markets do strange things. And the euro had plenty of friends, by the way. I mean, everything you looked at on Monday was going to be different, and it spread from indices to, I think, was it gold probably, maybe, and silver were the only ones that probably survived not actually going down. Because I think nearly everything else I looked at, apart from metals, did actually have some sort of a crash.
Yeah, I think oil for that period was up, but obviously since they dropped the lows, there wasn't too much up. Maybe a little bit on yields for about 5 seconds. So yeah, euro again using the similar technique. Now I'll go over to Solana here just to show again critical levels analyzed on a higher time frame. So we've got here the wicks that came off these lows, and then of course we have a very very key trend line here, and we have a very nice wick rejection. Now, of course, if we were looking at this rejection here and we were saying, okay, well, I don't want to necessarily buy the low, I don't know that's going to be it, but I am interested potentially getting involved should I be able to then have patience to react afterwards. Again, you can see here the anchored VWAP, the first touch, second touch after making a higher high, which is always important, makes us another higher high, another touch. And then recently, if you notice the sequence here is that we didn't make a higher high. And then, of course, we've come back down to test the same level. So why this is important is because we come back down to test the same level here, guys, and it did it off a lower high. So again, has it had the strong reaction up? No. And I think a lot of traders, it may seem really simple, but a lot of traders, especially beginners to intermediates, they forget how important it is to have that 1 step forward or 2 step forwards, 1 step back kind of action, but also to continue to show that sign of strength. If a market hasn't made a higher high, there's something potentially weakening there. And this just shows that exact thing occurring here on the charts. So another little bit of a warning when it comes to using this indicator, how you'd want to do it. Now, of course, are there other ways of using these potential things? Absolutely. You can drop it off significant highs, similar to how you use a normal moving average. Notice here that we've got the red moving average, which is 20, the blue moving average, which is the 50, if you're interested. And of course, we see here that the first initial reaction is short. and then doesn't really come back for a very long time. So that's probably going to be semi-inefficient, but you may have been wanting to look somewhere in here, potentially for a short. And when it does come up, it's fair to think that. So we'll have a quick look at the smaller timeframes here, and we'll see whether there's any action around there. And you'll notice that we kind of just get like a little bit of a slowdown, but not necessarily the stronger reaction that you'd expect. And I think that's just because of the nature of the extreme level. I think if this market wasn't so volatile, what would have happened is as it comes up, it would have found resistance. So again, it can be used both ways, obviously trend up, trend down. Think about the market you're in. Be market adaptive to the current volatility. If the volatility is a massive flash sell, then that massive flash sell, if it overshoots your Bollinger Bands, let's actually put a Bollinger Band on here by another thing that we use. So if we put on a Bollinger, we'll just put one of these standard Bollinger Band setting. What you may notice is that this is such an extreme low that it pushes past the 2 standard deviations, which is here. And I would wager this is probably going to be well through probably even maybe a 3 standard deviation. Yep, so well through a 3. So that's a pretty extreme move. You just don't see that very often.
That is a big deal. A 3 standard deviation contains nearly, I think it's about 98% of price. So yeah, breaking through a 3 standard deviation is a very, very rare event.
Yeah, so let's just have a quick look here again, and we'll have a look. So basically, this is the level. Bollinger back on. Moved it. Bollinger back on, and we just go to a 2 hour here just for a second. See, and again, at these lows, as you can see here, push the 2 standard deviation, and I would say at this point push the 3 standard deviation, which I mentioned there is quite an extreme move. So again, once it comes out of these extreme moves, that is always a very good sign that if things do reverse, anchored VWAP is a fantastic thing to be putting on those extreme lows. And it's something that we use a lot around news. So the reason we did today's show is because NFP is coming up, as Tyrone mentioned, and non-farm payrolls is one of those things that often goes like this, but it can push the markets in quite a large direction. And if you do get a huge NFP move, these are great to put anchored VWAPs behind. So a little bit of a hint, if you're looking as one of the tools in your arsenal, you can start to use anchored VWAP behind those major events. We've got a question coming in here from Calvin says here, Euro USD 30-minute time frame. The 1-2 strategy, I'm thinking of buying a position. Well, obviously, hopefully you can make your decision using your evidence or approaches. But in terms of whether we're using a 1-2 system or anything like that, what he's referring to is something we've coined a few times on the show, which is basically that you've got some form of moving average, and that is generally going to be something like a 20 or a 50 or a 200 or something like that, and that you've come off that moving average and made a series of high highs. So similar to the anchored VWAP process, Ty, we've got a low, we've got a high, we've got a higher low, we've got a higher high, and then of course we come back down here and we've got a higher low and it's hitting the 20 again. So if it then goes to a higher high, which is done, it would be fair to state that potentially if we come back to the 20 in the future, that could be an okay buy.
Yep. And I think though, and also this is why it's so important to have your bigger charts up with resistance and support, because if you know that resistance is still a little bit away, the chances of those higher high, higher low sequences continuing up until a proper higher level of resistance is in its way is still in play. What you don't want to be doing is obviously buying into a heavy resistance just on that signal alone. But if you know you've got room to move up top, and we've already discussed, the euro has probably got up to 105.50, I think, and then also up to, well, 105.50 is probably the first real resistance for it. There's still quite a bit of room to move for it. So it's a good trade, but it's really, really important to understand the bigger time frames to make sure that there's no roadblocks in your way. But hey, that's one of my favorite trading methods. I talk about it about 15 times a day in terms of higher high and higher lows off 20 moving averages. So I'm a big fan.
All right. So So far, we've covered a little bit of anchored VWAP off these extreme lows. Again, we've looked at some of the markets. As we often like to do on the show here, is we talk about some of the latest things as well. So anchored VWAP, start putting it in your arsenal, start thinking about it. Works particularly well on major pairs. So you can see here again, off the extreme low that we find here on Monday and the touches since that point. Again, series of higher highs and higher lows. Right now, we have a lower high. So for anyone in the chat, what would that mean if it comes down here? Would we be as interested in buying it? What do you guys think? While we go through this. So in general, Ty, I think that the markets have had to absorb some pretty tough information in terms of up and down all around. While we wait for that on US 500, let's have a look at some of our favorites recently, which of course have been gold. And gold just continues to powerhouse. I mean, geopolitical risks, geopolitical tensions, whatever you want to call it, it's probably a great fundamental, I guess, for gold, because gold is, of course, an uncertainty hedge in some ways. And that's exactly the way it's acting right now, isn't it? It just broke out technically and it just continues to pile on with buyers. And there are many reasons why this is happening, but that's a pretty strong trend. It looks like we might be getting at 2950, 3000 relatively soon.
Yeah, and I know that's not going to surprise you, Tom, because you've been calling the 3000 for quite some time now. And it looks broken out really nicely, hasn't it? It has broken out really, really nicely now. And I think that, and a lot of our people who come to our streams every week have been able to capitalize on this move, actually, which is really nice because we have been talking about it for a while. And when gold breaks, it often does break good and proper. Like it's absolutely on a tear. And if you look at it, I mean, realistically, it's almost in a straight line on the day. It's hardly got any pullbacks, which is quite amazing. So when it did actually break through, it can do this. I mean, this is not a surprise. Yes, it's an all-time high, but an all-time high on gold is a little bit different to an all-time high on the S&P 500. It's really important to remember that gold doesn't have to stop. And I mean, the S&P doesn't have to stop either, but the S&P is based on 500 companies' metrics. Gold is its own beast, and it could easily go to 3000 without a pullback, and would not surprise anybody.
Yeah, I think it's got some definitely movement behind it at this stage. I mean, just to give you a stat, we saw actually before it broke out, hedge funds start to dump gold, which is traditionally something go against. And then the price action did it. So, and what I mean by that is hedge funds dumping actually and under investing often means they end up having to get back into it. So it kind of, a lot of the time markets will move, and that's counterintuitive to what a lot of people think, but it does tend to be that way. If everyone's stacked to trade, eventually it kind of goes off when it hits crescendo of so many bulls. In this case, of course, we saw people, I guess, weakening on gold because it had been sitting around for a while. People were taking profit and then get this consolidation breakout. So it's been a nice trade so far. It's obviously moving higher, and at this stage, can't really see too much weakness. Now, could you use anchored VWAP behind these extreme lows? Yeah. So as you're making these series of higher highs and higher lows, another technique you can do is if you think you've got major lows, let's say these ones here, you can put the anchored VWAP behind those, and sometimes that will synergize well with 20s, 50s as well as moving averages. Again, the more reasons you have, the better it is. And this is, again, a market adaptive indicator. So in essence, it's one. I also note here that the 50 has been pretty good on the 2-hour recent times. It keep going down through the current bull run. So interesting to see if it does come down to the 50 in the future. Would that be an area where buyers recommence do see weakness? Let's jump on over to silver. Silver is absolutely doing very nicely as well. And this is another one that I've really liked. Now, it was a mixture of momentum breakouts that I think are key here. And I want to focus on this because yesterday we were talking about this into the open of the US, and I said, wow, this looks really solid. And I think the candle you want to focus on is, well, you want to focus on the whole story because we've been talking about this for weeks together here on the show, and we've obviously been discussing this downward trend line that we've got. We've also been discussing the consolidation pattern, the weakness at this, which has obviously been mentioned here as super bull breakout. And I wrote that on there because to me, this is a huge momentum shift. And then we see this beautiful candle that comes down and rejects. And I often say wicks hold orders and excitement in markets. In this case, the The excitement was there, and then something happened. Let's zoom in here a little bit. Let's go 30-minute chart, and we'll load that over. So you'll notice here it looks different if you go each time frame, but can everybody see how much pressure the market was putting on this top end? So some people will say that's a head and shoulders pattern into the breakout. Okay, that's fine as well. Hi, what are some of the best head and shoulders patterns? The ones in
Direction of the trend.
correct. Yeah. So again, in the momentum, in the direction of the trend, because you got to remember, what is a head and shoulders pattern? Yeah, okay, you've got the left shoulder is consolidation, the head is some kind of extreme move, and the right shoulder is consolidation. And if you start thinking about it that way, then if we have consolidation here in the direction of trend, a breakout to the downside, which could be, by the way, a bear trap that then gets reversed into consolidation, and then we see a breakout, isn't that a recipe and a storyline that you probably want to be part of? Because again, it essences the idea that it was probably a trap down here, and that is the patience and the reaction. We've seen the storyline. We don't actually have to predict as much as people think. The market is obviously getting stronger. And to answer that question from before, we've got some great ones here from Stuart, Jan, a few others. No uptrend may be getting weaker. And that was because, of course, the market on the S&P had done this. It's the anchored VWAP here, and it had made a lower high. So if it comes back down, got it similar to Solana, you've got to say, well, question mark, should we? Anyway, here is obviously the silver move. Now, Ty, for anyone that doesn't know, what type of potential take profit zone could we use with a head and shoulders pattern?
Well, anyway, for anyone who doesn't know, if you want to read the pattern in itself, you measure from the tip of the head up to the base of where the pattern is forming, and you project that out. And what we love as a rule at FX Evolution is when that actually self-fulfills its own destiny by having a resistance point around the take profit of the pattern. So when you get an overlay of take profit potential, which comes in the form of either resistance or a zone where there is going to be selling pressure, that makes that pattern strength even better, doesn't it, Tom? Like, we love those patterns that actually can proof into another way of actually taking profit. We love it. And as you can see, this is just one of those that goes right to it. And it's very close now. It is very, very close.
Yeah, so you might be thinking, oh, damn, I missed this. What sucks, whatever. But the thing is that, okay, sure, you might have missed out on that little trade. I think there could be more to come in silver. But the key is to come from that abundance mindset of being able to find opportunities. Ethereum got totally crashed and dumped on the Monday. So did Solana. So did Bitcoin to a degree. Just a few weeks ago, we saw other markets start to sell off. We've obviously seen Nvidia sell off recently to the most extreme levels of where we've generally seen a lot of trading and a lot of buying pressure. We've got stocks that are getting pummeled in just this morning's open, which is obviously going to be AMD and potentially Google. So there is always another opportunity in markets, and you've always got to think of it as, if you miss something, don't go chasing it, because trading is a game of patience, a game of temperament. And if you have a bad temperament, it's going to be incredibly difficult for success to come, because you're going to be your own worst enemy. I think that's something that most people struggle with over the first couple of years of trading and investing. And it's because usually when you get in, you get a couple of good wins, best and superhero syndrome and all of those types of things. And then eventually especially if you keep winning, it could be even worse, because then you start to margin up and leverage up and feel really good. And one day it goes bad, and that's when all sorts of things happen. So silver obviously starting to move towards this first resistance. And again, as Tyron said, the proofing really, really nice on that one. So we mentioned the euro. We've obviously talked about the S&P 500 a little bit there. There are some other things, though. The US 2000, which is the Russell 2000, has had, I would say, pretty nice pickup here off this level down in these lows. Again, flash sold. Pretty consistent large volumes recently through the Russell 2000. What happens, Ty, if we break out of this high here, considering we've got these wicks, these strong moves? Do you think that could be a significant thing for day traders to be looking at, putting anchor VWAPs behind this low, and then potentially looking for momentum breakouts?
Yeah, I actually like this one because if the markets are going to go long, I think the Russell's probably got the most potential because its all-time high is actually the furthest away from the three major indices in the US. I mean, if you want to count a lot of people actually ask us why we don't use the Dow Jones because they see it on TV, but they actually very rarely see it on our charts. And I mean, we look at it sometimes. We don't bring it up because a lot of people don't actually trade it as much anymore, but its representation is a lot smaller than the Russell and the S&P 500. So, yeah, basically it's made up of 30 stocks, where the S&P is made up of 500, and of course the Russell is made up of 2,000. So, it in our minds gives us a lot broader view of what the market's actually doing. Now, if you look at the Dow Jones, I mean, it's at an all-time high. I think it's right on it. Yeah, the S&P is close to the all-time high. And the Nasdaq's not very far away from it. But when we look at the Russell, we've actually got a few hundred points of movement. There are 100 and something points of movement that can actually give us a good move and still be in the direction of the prevailing indices where they're going. So that's why I like it. I think there's more potential for upside that you can capture if all of the other indices even just show a little bit of strength.
Yeah, and that's the thing. It could be a very quick catch up if it does start to find some momentum behind it. Got a question coming in here from James. Says, if the Russell does break that zone, it'd be in a new lightning bolt in the daily, right? Yes, I guess because it makes a higher high, that would be the lightning bolt component you're talking about. Again, here, just so you can see the low and the anchored VWAP, a very effective tool off extreme volatility days. So I don't discount it. People really am not using that one, probably considering it. So over here, this would be a significant higher high because of the projections as well. And I already think because we beat out this supply was already taken over here, that there's a good chance that the market is really loving this base. So I'd say it already has tried to change trend towards the upside. But yes, a new higher high will solidify swing traders.
And all we need is a good non-farm payroll result to have that happen.
Well, we don't even know if a good one's any good anymore, considering it's all about interest rates. Is a good one bad? Is a good one good? I don't know. But yeah, like that's the biggest issue, I guess, with the economy right now is we don't even know what the market sometimes likes to digest in terms of information. But generally speaking, yes, a good non-farms rate. Either you don't really want unemployment dropping. Unemployment going up. But so, all right. So US 2K finding some nice levels there, and we obviously saw gold and silver doing really well this week and tension going through, which makes a lot of sense about it. And then we have oil, which has been up, down, and all around. Generally speaking, I would say a bit more negative than positive. I think this breakout here could have got some people into the positive side, but now it's actually kind of tough when you look at it this way, because obviously you've got a very nasty looking candle, then you've got this rejection coming off the low, which looks like a bullish hammer. But I think when you start to scroll down through the time frames and you use one of those other tools today, which is fixed range, pop the fixed range through this area, you're going to notice that the market broke down, it then came up and it tested into this heavy trade range. And so far it's finding weakness. Are you feeling bullish, bearish, neutral? What are you thinking about oil?
Yeah, I'm still a little bit on the fence with where this one's going to go, actually. It's kind of still in that zone where it doesn't excite me. I think that it's a bit of a wait and see on it. Look, it's done. Yeah, I'm not keen. I'm not keen just yet. Yeah, it's sitting. Look, I think that to me, if you go out to a daily chart, if we'll just go to a daily for a second, where it sits at around that sort of 72.50 level, if we zoom it out just a little bit, you'll see that there's a lot of support there that was resistance previously. It was a very, very strong channel at that level. You can see the 72, the 72.50 to 72.80 zone is a real zone. And I think if that gets broken down and the daily actually closes lower than this, I think there's a real possibility we might find ourselves at 68.50 again, which is at the bottom of that sort of mini channel. So it's a bit of a do or die level for it. I think if it finds support here at 72.50, we could see potentially a bounce back up to 77 without a lot of trouble. But a daily close below there, And I think it really opens itself up to a move all the way to 68.50 again, which wouldn't be a bad thing for traders. I think it's a really good level because it's a very safe zone for it, but it's a bit of a do or die level right now.
Yeah, and it's tough to read. I got to say, oil it is probably the toughest this year due to all of the geo stuff. There's so many things that could be going on. So I would say almost if you wanted to even just like chill on oil and maybe just look at some of the other pairs, this one will be, I believe, one of the most hard to navigate from
I think so.
the possibilities like this where things could happen. So I keep that in the back of your mind. It's kind of like when the Euro Swiss was pegged years ago, and it was just a dangerous trade. And then of course we all know how that worked out. Then you had, of course, the US dollar yen with the Bank of Japan last year. That became a little bit of a dangerous trade because, of course, of the Bank of Japan's interference and types of things. So you've just got to be careful when you've got these external factors. Your TA can be great, your risk management can be great, but just remember there are some pairs sometimes that you want to say, you know what, is that really worth my risk for now? That's what a great trader or an investor will help manage, allocate for that. It's that time of day, Ty, where we do take questions. So if people do have questions they want to ask about something, we'll answer it right now. While we're waiting for that, let's talk about Bitcoin here, because I guess it's a little bit of crypto here this week. But the reason is because we've seen some nice technical kind of setups and obviously some extreme volatility. Now, this one is probably one of the most interesting charts because not only do we have some large wicks coming off these lows down here, but we still have the possibility of a distribution. So both bears and bulls could be looking at this chart and saying, I hope it goes down below here so I can look at this thing absolutely getting crunched. And then bulls are saying, yeah, well, every time it comes down to these prices, we're finding buyers. In these situations, I think you're always better off going with the generalized direction of the trend, don't you, Ty? I find that to be usually the stronger play. But of course, there's a case for both. And that's the thing about
Yes.
markets. There's always a case. Which one's stronger?
There is definitely a case for both here, and I think it's really important to make sure that you factor that in. It's one of those ones where sometimes there's a bias where only one direction makes sense, but I think in this instance, I think both of them make sense actually. So it's certainly one that you have to keep an eye on. But I think that a breaker out either side is tradable with enough momentum really. So certainly one that we're watching with interest, and I think the world is.
Oh, yeah.
It absolutely is.
Yeah, I think a breakout to the upside will make the most sense just from the week perspective. But if this is taken, this 86, 87 area, it's not going to be a great sign for the crypto cycle, as many like to call it.
No, that's not.
So we do have a question coming in here. When you're trading things like news, which obviously I assume it's earnings releases, or stocks, how do you manage your risk on those? Well, it's a good question. And it comes back to, again, one of our statements and our slogans, which is patience, react, don't predict. In many ways, you usually get the option to place excellent trades after the earnings. A lot of times people do it before the earnings, but it can be very risky. I'm just going to show you two things. So let's look at PLTR first, which is pretty much the good news story. So if you bought this before earnings, then fantastic. Obviously, that was the direction of the trend, which does make it, I guess, a little easier to do that. But it ran up a lot. Now, if you were shorting against this, there's nothing you can do. It just opens up and you're going to get earnings comes out, you're going to get hit. So you've got to remember that's not an insignificant amount. It's 24%. So earnings can be kind of like that. If we have a look at another one though, let's have a look here at AMD today. So AMD is kind of the flip of that. It went up during the session and now the earnings has come out and it's gone below. Now, because we see here huge volume in the previous session, if we get a huge volume spike back towards the upside today, could that be a candidate for potentially starting to use some extra tools on anchored VWAP? Obviously, bringing your own systems, making your own decisions. Of course, you've got to make your own decisions, guys, and place your own risk management, etc. But these are the types of things you can do. You get so much more. The power is in your hands when you have patience. The problem with earnings results is often people can gamble into those earnings or news results, and then they get lucky sometimes, and they say, "Look, I knew." It's fantastic. But yeah, I would say be cautious. Patience, react, don't predict is more than just a slogan. It's also to do with things to do with earnings. So sometimes you'll get really good opportunities, abundance mindset. Any other thoughts on that one?
No, I think that's pretty much summed it up. Actually, I think that it's showing signs that it could turn, and if it does, I think there's some really good upside. But it's got to prove it yet. It's still got to do it, and yeah, let's just see it. Let one play out. I think it's one we'd certainly watch.
This is a question for the US dollar versus CNH, which is China offshore spot. And now in this case, we have, of course, a resistance up here that was hit through the tariff discussion of Monday. Since then, it has dropped back off. And the question is, do you think it will reach 7.2483? 7.248 be down here, lower, something. Okay. Well, I mean, you've got to think about, okay, so what have we got? So if we go to the weekly, did we hit a critical resistance? The answer is, we certainly did. Have we since then retested that through panic news? Yes. Panic news is now sold. So it would be fair to state that the current trend is probably on all timeframes that are 2 hours and stuff is trying to get back down there. You are coming into one of these tight zones. So what would we usually use would be probably a volume profile, and we would volume profile this area to see where the most traded area is. And then around this area would be generally the zone that you expect if the market was to find buyers that around in this area. That's usually the way you do it. You're trying to play your odds and stats. I mean, to get a guess on 7.24, whatever the level is, that's a bit of a guess. We like to build the evidence. So at the moment, what are we doing? We're trading in the most traded area that previously sent the market back up. So we can't be sure that there aren't buyers here. So for someone that was short up here, if they didn't have a longer term plan, they may take profit here when they tie it. It's a possibility.
Yeah, absolutely. Yep. Certainly something to watch out for.
Yeah, so it's something that I guess you could stack onto your charts again, volume profile, anchored VWAP, etc. At the moment, though, the sequence is a series of lower highs and lower lows. Now, if that changes, that could also be a warning sign for you. So these things can all be starting to implement into. All right, thanks so much, guys. Thank you for joining us here this week, and I really appreciate each and every one of you, as does Tyrone, I know. And yeah, it's great to have you here. So remember, sign up down below. Links in the description to make sure to get here every week for the lives. And we look forward to seeing you next time for another exciting content. And of course, start to implement some anchored VWAP. Why not try using it? Bring it in. Obviously, test before you do anything with anything. But it might be a handy technique to start to implement. It's a good indicator.
Most definitely. Thank you very much, everybody. We look forward to seeing you at the same time next week.
Thanks, everyone. Bye for now.